So if Shanghai basically runs out of gold, then you could have a basically explosion in the gold price, and it could jump to 1,500. And it wouldn't matter what the dollar did, gold was going to go higher because the event happened in China.
A new silver company for investors, with Keith Neumeyer agreeing to become a major shareholder. Luke Norman, co-founder of Gold Standard Ventures, is the new chairman, and the company has acquired 3 former First Majestic silver properties. To learn more about this must-own silver stock, go to futuremoneytrends.com/silver1. That's futuremoneytrends.com/silver1.
Hello, everyone, and welcome into crushthestreet.com. I got a special interview for everyone today. We're going to be discussing, what to expect here in the markets for 2017. And, the markets are proving to be quite interesting this new year, especially precious metals. And to talk to us about this, we have Don Durrett, returning guest of goldsilverdata.com. And he's an expert in the mining sector and precious metals. And he's the author of How to Invest in Gold and Silver. Don, thanks so much for joining me today.
Thanks for having me back, Ken.
Don, one of the things that you pointed out in our previous interviews, and one of the things that you said you'd be looking for, which would be a concern, is if the dollar would get stronger. And you mentioned the dollar index. If we start hitting that 95 points, 95 on the dollar index, that, we could see some problems. And I remember, watching the dollar index go up, and it kept bringing me back to the interview like, hey, we might see some serious headwinds for precious metals. And sure enough, since the summer of last year, precious metals has been on the downtrend, and the dollar index is over 100. Actually, right now, 101, off a little from its high of 103. But where are we with that? Given the current situation, how do things look?
Well, the dollar is having a really big impact on gold. So for me, I think that's the one number that you really have to keep an eye on. For instance, since, I have a gold mining website, and I have members on that site, so I have to focus a lot on the price of gold, of course. And so once we jumped over 94, 95, I knew we were going to have a lot of headwinds. And the dollar kind of took over the direction of the gold price. So we saw basically in August, we had gold basically top out 1374 in early August. And that's when the dollar started strengthening. And we fell all the way down to 1122. And now we bounced back up to 1180 today. So it looks like, and the dollar's at 101. If the dollar goes to 105, it's possible that we could break back down. But I think since we bounced enough off of that 1122 that we're not going to retest 1122 or 1045, which was the low last December. So something happened on Monday that I think was fairly significant. We actually had a decoupling between the dollar and gold. We actually had the dollar go higher and gold go higher. That's the first time I've seen that happen since August. So that tells me that even if the dollar breaks out here, and I'm not sure if it's going to get up to 105 now what we've seen here the first trading week. So even if it goes to 104, 105, I think that we probably we might have a low here for gold. We'll have to wait and see what happens, though.
Yeah, no, that's a really actually interesting point you bring up. Was there any insight as to why we saw that this week?
No, a lot of these, when you get these decoupling trading days, and there really isn't any rhyme or reason why they happen. It's just that gold tends to want to go higher.
There's a stronger demand for it.
People are not comfortable with all this enthusiasm around the economy. Gold is basically a hedge trade. And so when you see gold do that, when you see it basically do a decoupling and not trade with the dollar, that's showing you that people are fearful and they want to buy the dollar for whatever reason. but it's positive for gold. So a lot of people are saying, if you're worried about gold basically going back under 1100, because every $10 move under 1100 it just crushes the mining shares.
So basically what you're saying is the same reason why people are hesitant about the economy and going into dollars, they're also going into gold for the same reasons.
That's what it appears the first week. It appears that people are not really kind of buying into this strong stock market, that the stock market, and we can talk about it. I think that some people think it's going to go to 22,000 this year, but if it goes to 22,000, it's really going to be kind of in a bubble kind of situation. You have, I guess we can go ahead and move over to the economy here. You have the housing market, which is in a bubble situation, I think. I mean, prices in 2006, everybody thought that was a bubble. Well, prices are back to 2006 levels. So, housing, is part of the strength of the economy. How strong can housing be this year? We have 3% on the 30-year bond, so the housing market is going to has some headwinds there with interest rates. So it's going to be tough for the stock market to really, really thrive in this environment. So that gives people kind of pause as far as how strong the economy is going to be, where they're going to put their investments. Are they going to invest in real estate? Are they going to invest in the stock market? So you start to get a bit of a bid for gold. Now, I don't think that gold is going to break out here because, especially in the first half of the year, gold might get a little bit of a bid, but it's not going to, say, break over 1,300 anytime soon. And the reason why is because the economy does have some strength. The PMI, which is the most important, that's the Producing Managers Index, that's actually the most important economic number as far as the strength of the economy. And it came out this year, it came out for December at 54. So that shows you we're not going into a recession here in the first half of the year. Also, autos in December were, they surprised on the upside. Now, some of that has to be due to interest rates. People are buying cars because they think interest rates are going higher. And then the jobs market, yeah, that's a possibility. We'll have to wait and see what we see the next couple of months. And the jobs numbers are not, they're not terrible. Of course, 90% of the jobs are basically contractual jobs or minimum wage jobs. So job market isn't strong, but it's not weak either. So we don't have enough weakness really for the fear level for gold to blast off here. So we're kind of in a no man's land trying to see what's going to happen with the economy in order for gold to break out here. Now, for gold to really get strong, it has to get up to 1270, which is the 200-day moving average. So we're at 1180. It's got to go up to 1270. If it gets to, say, 1225, that'll be some strength. So we'll basically be in a bit of a strong, somewhat, people are going to be a little bit optimistic around gold if we get to 1225. But I'm saying that even if we jump up to 1270, it probably is going to bounce off and go back down to 1200, and we're going to get stuck in this small trading range until the economy gets weaker. And that's where kind of the Trump effect comes in. Is Trump going to be successful? Are people going to be buying into this stuff? I'm not so sure if he's going to be able to pull it off. And then maybe the second half of this year, we see weakness in the economy. We see the dollar roll over. The dollar really needs to get back to 95, in my opinion. If the dollar gets back to 95, then we can get back to 1,300 gold.
That's interesting. When something that I've been kind of doing some research on and thinking about here is with people getting optimistic on stocks, they're obviously selling bonds, and with that, interest rates are going up. And with interest rates going up, there's a lot of things that those interest rates are, the interest rates are dictating, in terms of all of the debt that is dependent on these ultra low interest rates. And it's almost as if the economy can't afford the markets can't afford for people to get optimistic on the economy, because that's going to cause people to go into stocks and sell bonds and interest rates to rise, which so many things, like you were saying, such as real estate, are dependent on these low prices. It seems like there's just so many breaking points all over the economy. Would you agree?
Yeah, absolutely. So Trump I think he's in what I call an untenable position, because he wants to increase the GDP. He wants to get, like right now it's around 2% approximately, maybe a little lower than that. He wants to increase it, but at the same time, the only way that he can really do that is to add debt to the economy. He's going to have to stimulate the economy. But what we've found is that the more debt that you add, the sicker the economy actually gets.
Yeah.
So it's kind of a catch-22. He needs to add debt, but at the same time, every time if he adds debt, like we have, annual deficit, the actual debt, we've added we're adding about $1 trillion a year. So he can't pop that up to 1.5 trillion. If he pops it up to 1.5 trillion, that's going to have some negative consequence.
Yeah.
In tandem with that, so it's going to be really hard for him. In tandem with that, he has an overvalued stock market. So if he's trying to kind of pump the economy, and he's going to do it through basically a tax bill, which is going to lower the taxes for everybody, which is increase the debt. But that's going to potentially stimulate the economy, because if he lowers taxes, and he's talking about lowering the corporate tax rate, that's going to create a bit of a bubble market. And it's ironic that he talks about bubbles in the markets, and he's going to actually try to create one. That's not a strong market, that's a bubble market. And the other problem he has is the dollar itself is at 100, 101. That's a strong dollar. A strong dollar really isn't beneficial for basically growing the economy. It's better to have a weaker dollar, that way you can export goods. 40% of the corporation's profits come from overseas, which is dependent on the dollar. So the strong dollar is hurting them. So that's another thing that he has to kind of overcome. So he's going into a situation that makes it really, really difficult to increase GDP without simultaneously creating problems.
Yeah. Well, no doubt he's in a major pickle here, dealing with so many unsustainable situations. But, I would have to say that long term, in terms of the country's competitiveness, and, if we were to say, hey, what is best for the country in 20 years, 30 years, I would have to say being more competitive in the world economies, global economies, is good for the long term, regardless if, hey, it's going to increase the debt in the near term, because again, that's a symptom or a consequence of all the problems in the past. But if we were to say, hey, what's good for things long term from now, I have to say, making the country more competitive, wanting to encourage growth to happen here is all positives.
I wanted Trump to win because I knew that if Hillary won, that we were basically going to go downhill as a country. I mean, for me, it was inevitable. The writing was on the wall if Hillary won. So you had to want Trump to win from the standpoint that he could potentially turn things around. Now, I use the word potentially.
Right.
But our debt is so massive at $20 trillion, and the dollar as the reserve currency is reaching a point where it could very well diminish. During his 4 years, we could see the dollar as a reserve currency diminish. For instance, oil is by far the number one international trading commodity on a dollar basis. And 50% of oil exports are by two countries, Saudi Arabia and Russia. One of those countries, Saudi Arabia, Russia is already selling their oil in rubles and yuan to the Chinese, who is the number one importer. And Saudi Arabia is the other large exporter. They are going to potentially start selling their oil to the Chinese in yuan. So this is probably going to happen in the next 4 years. So that's going to hurt the U.S. dollar in some respects as far as a reserve currency. So that's another headwind for the country. So it's going to make it tough. So you have this incredible debt, and then you have the dollar, which basically the world's been supporting our debt. If you look at kind of history a little bit, the United States was basically the global economic superpower in 1970. Since 1970, we've literally been on a decline. Both in real income numbers and real wealth numbers, and the amount of debt that we've needed in order to maintain our standard of living. And we peaked in 1995. Basically, if you do a little bit of research, right around 1995, the U.S. kind of peaked economically. Since then, we've had to rely on debt, and our income levels have decreased. Since 2000, it's become really apparent that we've peaked because the middle class has stopped generating increases in income. So Trump has to turn all of that around. So he's against historical norms, historical levels. For him to do it, I mean, it's going to be fairly amazing. I think he could do it. I mean, I have lots of ideas of the way he could, but wow, is he up against it?
Sure. Well, Don, one of the things you talked about there is the Middle East getting away from the U.S. dollar. And of course, when that happens, we could see some situations where we get involved in ongoing wars to protect that oil trade because, at least in my view, that's exactly what we've seen now for many, many years. And that's been a major, major aspect to what has sustained, and I'll use that in quotes there, the U.S. economy. Let's talk real quick. You mentioned gold. 1275, 1270 was a significant price target for it. What about silver? Do you like silver? Do you tend to like silver more with Trump's pro-growth and the inflation implications surrounding it?
Yeah, I like silver as an investment. We're talking about gold because gold is I consider gold kind of the big dog, or what I call the kind of the father figure, where silver is kind of a little sister, or the big brother, and silver is kind of the little sister. So silver is going to follow gold. It's not going to lead. But from an investment standpoint, as far as physical investment, physical silver is, from my standpoint, is probably the best investment you can make today. Versus physical gold, I see more as an asset, as something that's kind of an asset that you hold, not so much as an investment. For instance, silver will very likely in our lifetime go well over $100. And the reason why it will do that is because silver is just used in so many things. I mean, anything electronic uses silver. Every solar panel uses about 1/3 of a gram of silver. Silver is needed in, 80% of silver that's mined is used in some type of a fabrication process. Only 20% is used for investment purposes. So silver is just an unbelievable investment. I really, really like it. And then the silver producers in the mining side, I think, are just fantastic. Silver, I mean, in 10 years, which isn't that long from now, in 10 years, we are literally going to have a silver shortage. That's conservative. I mean, that's worst case. We could have a silver shortage before then, but within 10 years, we're going to have a silver shortage. So if you buy some physical silver today and you stick it in a box and wait, there's not that many things you can invest in to get a 10 times return, which, and in my opinion, is kind of a low risk model. So I don't really look at the silver charts too much as far as trying to see where they're going, which direction they're going in. I look at gold because silver is going to follow gold.
And is there anything specific in terms of Trump's policies that make you especially bullish on silver? Because, if we do get a pro-growth, strong economy, that actually might put some pressure on gold. And do you see that putting pressure on silver as well? Or could we see a surge in demand for silver because of the industrial growth that is either anticipated or actually happens?
Well, let's talk a little bit why you invest in gold and silver. Gold and silver they've been kind of out of vogue for a generation at least. Gold and silver are really only, in my opinion, are only needed, if you will, in a fiat capitalistic system it's basically on the precipice of failure. It's a hedge. You want to, and then the more that you recognize the weaknesses in the economy, kind of the more that it fits your investment strategy, your priorities. So the more you're going to invest, the higher percentage you're going to have a position in. But again, to repeat, these gold and silver are really investments against kind of a systemic breakdown. Which, and you think that, it's impossible, it's not going to happen. But look, we've been adding $1 trillion in debt a year. These are big numbers here. The United States government literally cannot exist without debt at this point in time.
Yeah.
And a lot of that debt, and the only way we can get it is from foreign money. So if we were cut off, if you will, if we were cut off tomorrow, or we couldn't go out to the bond market and borrow more money, what do you think would happen with gold and silver? They would both explode in value.
Yeah, absolutely. I couldn't agree with you more there. Don, so when it comes to the miners then, can you give us a situation with the cost of production and how low gold and silver can go in this current environment?
Yeah, sure. So that was actually two questions. The first one is the cost of production. So for me, $1,300 gold and $18 silver are kind of, for me, those are kind of the floors where I'm comfortable. And we're under those right now. So anytime you're under those cost floors, there are miners out there that are hurting, both on the gold side and the silver side. So right now, if you're a gold and silver mining investor, you're taking on a lot of risk because you're below those thresholds. Depending on, of course, your stock selections, you can be very careful, of course. But you, as an industry, you really, from my perspective, you don't want to be below those levels. Once we're above them, then we're in a healthy situation. For instance, it's tough right now to raise money in this type of environment. It's basically a low gold environment. It's your 1180. But once you get over 1,300, the banks kind of come out of woodwork and want to loan you money. So we need to get above 1,300. We need to get above 18 before we're kind of in a healthy kind of a situation from an investor standpoint. Now, the second part of your question is, how low can gold go? Potentially. I mentioned earlier that I think that 1122, which we just traded out a month ago, is probably going to hold. We'll have to keep an eye on the dollar, of course, but I just have a feeling now that people are starting to recognize the various risk elements, and so 1122 could hold. But if we trade below 1122, the risk levels really increase. Like I said, every $10 drop, say below 1122, the miners get hammered. I mean, hammered really, really hard. I mean, you can lose 10% in a day in your portfolio. You can lose 25, 30% in a week. It's unbelievable. But that's where the upside comes in as well. So we just have to keep an eye on the dollar. If the dollar can't get any traction here, then that's positive. And what we really want to see is we want to see the dollar under 100, and then we want to see it under 95. And then we'll see gold get back over 1,300, and then we're in a strong position again.
Don, let's talk about gold going up and with a strong dollar potentially. And, I'll throw this scenario at you. Say the U.S. goes through, some pro-growth time here in the next short term, 6 months, 12 months, and we see some major economic problems globally, maybe in Europe, China, and the demand for precious metals goes through the roof outside the U.S. borders. So the dollar gets stronger, and the surge for dollars happens, surge for gold happens. Is that a scenario that you see as plausible, where we do see just it coming from a foreign country and it being a very, very bullish for the metals and the dollar simultaneously?
Yeah, that's a scenario that can happen. I mean, it's something that hasn't happened before. Not in not saying the last couple of years. Now, the one way that could happen is the Shanghai Gold Exchange. So if the Shanghai Gold Exchange, let's say that we start to have some physical gold problems. For instance, the end of January, we had the Chinese New Year. And currently right now in China, we're starting to have a lot of cost controls around their currencies. So let's say that we have a breakout in demand in China for their New Year, and they start to have shortages. And then the Shanghai exchange, and the Shanghai exchange is basically a deliverable exchange. So most of the gold that's traded on Shanghai is delivered. So if Shanghai basically runs out of gold, then you could have a basically explosion in the gold price, and it could jump to 1,500. And it wouldn't matter what the dollar did, gold was going to go higher because the event happened in China. And gold is priced in dollars. So if you have any type of a shortage situation, the other scenario is the refiners in Switzerland. So most of the gold purchasing right now, most of your importing gold is happening in two countries. It's happening in India and in China. So what's happening is the gold is moving from the west to the east, and it's going through the Swiss refiners who take the gold, either the 400-ounce bars, or they take the gold, from the miners, and they refine them into 1 kilo, 39 bars, and send them to China and India. Now, if the Swiss refiners, if they run into any problems with getting supply, then you'd have a bit of a shortage scenario, and in that situation, you could have the price of gold going higher. And again, it wouldn't matter what the dollar was doing.
Well, hey, Don, that's great analysis right there, and it's really interesting, actually. If people want to learn more about you, and first of all, actually, if you have any closing thoughts here that we didn't get to, or you wanted to share, please do so.
Okay. Yeah, I had a couple other things real quick. One is that back to the Trump situation. I just think that we're going to have some type of trade wars. I don't know if it's probably going to be with China, of course, because they're kind of our number one trading partner. But who knows? One thing that Trump can do is he can use executive orders for trade policy. He can use executive orders for creating tariffs. So, and he can do that on a case-by-case basis. I mean, yesterday, he tweeted to GM that if you make your cruise cars in Mexico, I'm going to tax them. He can literally do an executive order on a single product.
Wow.
So we're going to see, I think that Trump, he's probably going to do some of these executive orders. We're going to get some type of a trade war, which I think is probably going to impact the economy. The other thing that I wanted to mention was Obamacare. And Obamacare is basically a tax bill. So for them to repeal it, I mean, Congress basically does not repeal taxes. So one of the things you're going to see in that is they're going to try to keep the taxes and get rid of Obamacare. So that's going to be a fascinating thing. So both of those are, I mean, those are going to happen this year, I think. And so we could see the impact of the economy. So the second half of the year could be weak. The last final thing I wanted to mention was the fact that Trump, he's going to have to break a 100-year historical trend that any president that's followed a two-term president has not had a recession in his first year of office. So let's see if he can pull that off.
Yeah, no, that's going to be tough. Wow, and the way you pointed out the Obamacare tax, that you think they're going to repeal Obamacare, or at least try to, but then keep the tax. Wow, that's really interesting there, Don. And it's so true. I mean, once a tax is in, nothing ever goes back. It's it's suicide for the government. Why? Well,
there's like 3 or 4 taxes in that bill or more. One of them is there's actually a capital gains tax in there, of all things. There's also a Medicare tax in there, And then there's also the fines that if you don't pay, you get taxed. So those are three, and there's several more. So it's literally a tax bill.
Well, I'm going to hope that Trump does the best for the country as he possibly can. But having said that, I know he's dealing with a massive plate, as you've pointed out here. So, Don, if people want to learn more about what you do, where would they go? At, goldsilverdata.com. What would they find?
Well, I actually changed the name. It's now goldstockdata.com, but you can go to goldsilverdata.com. So a little bit about the website. So the website is for gold and silver mining investors, and there's 650 stocks in my database. It's very comprehensive. Come and check it out if you want to invest in mining stocks.
All right, Don, thanks so much for taking the time with me today. I'll be looking forward to doing an update here in the next couple months, see what happens in precious metals.
Sounds good, Ken. Thanks for having me.